Hi everyone, welcome to the channel. Today I'm going to show you 5 high quality dividend stocks to hold forever. We are going to check the dividend score for each stock and also the valuation with the help of fast graphs. Okay, so here is the list. At number 5 we have American Waterworks. You can't live without water, that's just how it is. And we can see that they have actually outperformed the S&P 500 quite a lot during the last 10 years. But the dividend score is only 4 out of 10 points. The earnings estimates forward is looking bright though, but the yield is a bit low. Let's check the valuation. Here we can see in fast graphs that they are extremely reliable when it comes to the earnings, which is the orange line. And this is to be expected from a utility water company. Same goes with the dividends, it's also very stable. Yeah, they are actually growing quite fast. Their earnings are growing about 10% annually. Right now though, they are a bit overvalued, and if we project out to late 2024, we can actually see a negative annual rate of return of about -6%. Even if it's a company that you could hold forever, the valuation probably needs to come down a bit before going into the company. Okay, next up, 4th place is Lockheed Martin. And the truth is, as long as there is people populating this planet, there will be war. And Lockheed Martin are one of the largest defense contractors in the world. We can see that during the last 10 years they has greatly overperformed the S&P 500, and this is with the dividend reinvested. And you can probably see right now also that we have all green check marks for every metric here. So we have actually found a 10 out of 10 for the dividend score. The return of capital, dividend yield, they are buying back ridiculous amount of shares. Last year they bought back 4.26%, and also the payout ratio is low, growth is nice, and they have been growing the dividend for 19 years now. Okay, but how does the valuation look like? Let's take a look. So here is the valuation in fast graphs. We can see the earnings if we remove the normal PE, that this is also very steady. It's faring well in recession. We can see it during the 2008-2009 recession, and it peaked quite a lot last couple of years. It is expected to have a bit of a down year right now, but after that it will probably pick up again. So if we project out to late 2024, we can see an annual rate of return of about 2%. Even if this is a forever stock, the valuation right now is a bit high, and the stock price needs to probably come down a bit for it to be a good deal. Okay, next up, at number 3 we have Johnson & Johnson. It's one of the world's largest drug manufacturers and healthcare businesses in the world. It has a very large market cap, so it is a big part of the S&P 500, so it has followed it quite a lot. A bit of underperforming if you compare during the last 10 years. The dividend scorecard is 5 out of 5, and they have been growing this dividend for 59 years, so this is a dividend king. Total score of 8 out of 10 points. The only weak point here is the earnings growth. So yeah, such a large company, it's hard to have massive earnings growth. Okay, so how does the valuation look for Johnson & Johnson? Here in fast graphs we can also see, if we begin with the earnings, that is extremely steady. A bit dip during the disease, but other than that it's tracking along extremely stable. If we also plot the price, we can see that the price follows the earnings like a magnet. And if we also put in the normal PE, we can see that it's a bit valued over 15. Its normal PE is actually 16, and the earnings growth is about 6% annually, which is a bit weak. I think the S&P 500 during this period is about 8%. But if we project out to late 2024, we can see an annual rate of return of about 5%. Let's check the next stock in the list. At number 2, we have Kroger. Yes, we need food to survive, and the world's largest, at least the largest grocery store chain in the US is Kroger. Here, during the last 10 years, we can see that it has been a bit cyclical, but it has overperformed the S&P 500 by quite a lot, and this is with the dividend reinvested, about 500% instead of 366%. Doesn't look too good with the financials if we look at the sales and earnings, but the dividend scorecard is 5 out of 5. So a total score of 5 out of 10. Let's check the valuation. Here in fast graphs, we can see that the valuation is also very steady. During the last recession, they only dropped 11% of their earnings. And during the last disease, people were hoarding, so the stock price and the earnings went crazy. If we project out to late 2024, if it's going to trade at its normal multiple, we can expect an annual return of 8.8%. So let's check what stock is the number 1 in our list. And the number 1 stock is TD Bank. Yes, financial services are extremely important, and TD Bank is one of those diversified banks which are very, very conservative with their money. They have been extremely stable during the last crisis and also the 2008 banking crisis. They have underperformed the S&P 500 a bit, but they have a total dividend score of 6 out of 10 points. And the stock price has come down a bit now, and the yield is actually over 4%. Payout ratio is low, about 40%, and they are growing the dividend with a rate of over 9%. Let's take a look in fast graphs. And here in fast graphs, we can see that the earnings are actually quite stable to be in the banking sector. If we, for example, compare to Wells Fargo, we can see that this is much more cyclical and they are dropping much more in the recessions. But if we go back to TD Bank, we can see, because they have not that much of investment banking, more consumer banking and stable balance sheet, that they are faring very well. They are growing the earnings about 8% annually, and right now, if we project out what the analysts expect, we can actually see an annual rate of return of over 22%. Those were the 5 forever stocks. Please leave a comment if you agree or disagree with the list. If you found the video informative, please also hit the like button. See you next time, guys. Hej då!